Hey everyone, welcome to today's live stream. It is Monday, May 12th, 2025. Hope you're doing great. Am I streaming? I think it's streaming. Lots to cover today as usual. Every day. That's what I love about the equity markets. Every day is different. There's never the same back-to-back weeks. So let's dive in. I want to talk about a couple things today. Earnings. We're going to start with earnings. Nothing like last week. Last week was a lot of technology stocks. This week we're seeing you can see the list here. Hertz, Monday.com posted earlier today. Honda tomorrow. Under Armour. Sony on Wednesday. I'm just mentioning the bigger names here. Cisco Wednesday after the close. Alibaba on Thursday before the open. We got Walmart. Big day actually on Thursday. Canadian Solar, John Deere, and not too much going on Friday. Never really is. Friday's not a big earnings announcement, releasement day, but Monday through Thursday certainly are. And Thursday seems to be one of the bigger days for earnings coming out. All right, we've got a robust market today. Dow is up over 1,000 points. NASDAQ is up over 4%. Just an absolute huge day. A lot of the narrative is around this trade war situation with China, and apparently a 90-day delay, but a reduction nevertheless. So we're going to see, we're just going to have to see how this plays out. Micron is looking good. Earnings came out recently. Stock did break through the SMA 50 and headed, it's got the SMA 200 in its sight, and once it goes through the 200, you're going to see a bigger move to the upside, because that's called a golden cross, when the stock price goes above the long-term averages, simple moving average, 200 days. So keep your eye on that one. MFI still in the sweet spot, 68, not at all overbought, has room to run. I wanted to track. I was asking ChatGPT, to track money flows, like what's going on, or is money flowing into the markets, out of the markets? Interesting, very interesting. A mixed bag, basically. Diminished equity inflows in April. The U.S. equity mutual funds experienced their lowest inflows in the past 12 months. Investors concerned about the economic impact of ongoing tariff disputes shifted their investments towards safer options, including debt and hybrid schemes. There you go. ETF inflows continue, though. Conversely, so money coming out of mutual funds, we've always said that's why mutual funds are one of the worst investments you can make, because investors tend to sell when their stocks are going down rather than holding tight and buying more. ETF investors are a different breed, maintain strong performance, attracting a record 1.1 trillion inflows in 2024. While 2025 may present challenges such as market saturation and the closure of underperforming funds, the ETF sector remains optimistic. Global ETF assets reached 14 trillion by the end of 2024. Investors are increasingly favoring value funds over growth-oriented funds. In March 2025, value ETFs saw inflows of 1.8 billion, while growth ETFs experienced outflows of 3.6. So what is a value stock? A value fund is made up of value stocks, and those are companies that are considered undervalue or are good value in the current market. So that's kind of a flight to quality or a flight to safety. Money flowing in there, but leaving growth stocks. The shift indicates a preference for stability and lower risk investments. Global investment trends, political and economic instability in the U.S., particularly concerning trade policies, has led some investors to reallocate funds to European markets. European equities and bonds have shown resilience, with the stocks Europe 600 gaining 4% year to date, and the euro appreciating 9% against the dollar. We've seen the dollar weaken, but having a huge strong day today. We'll talk about the dollar in a moment. Snapshot, despite the cautious outlook, major U.S. equity indices remain strong. The S&P 500 ETF, ticker symbol SPY, is trading at 581. So 581 was a real important mile marker for this index. And let me bring it up just to show you what we're looking at here. So if we look at the S&P 500, and we need to overlay the, let's go to the advanced chart. Actually, I think it'll be much easier if I can just do it through SSP. Here we go. So what I'm doing is I'm pulling up the S&P 500 ETF. This is one way to track the performance of the S&P 500, ticker symbol SPY, SPY. But look what happened today, y'all. This is so critical importance. It moved above the 200. See that? See where the blue box is rising above the SMA 200, blue over that sort of yellow orangey box there. Very big move, and this can go higher. Like we could see the S&P 500 in the 600 range. Just going to make a really nice move from here. If it holds this golden cross, that would be fantastic. And then we're off to the races from there. So big changes in the indexes today, big movements in the NASDAQ, in the Dow. The Dow up, as I mentioned, over 1,000 points. Crude oil is moving too. There's talk of crude oil going back higher. Silver and gold are off slightly today, but because look at the US dollar today, up 1.59%, up $1.60. It's first time back over 100 in a very long time. It's been a bit since it's been back over 100, but it's still down 10%, just about 10% from the 52-week high of 110. But at least it's moving in the right direction. We need to see a stronger dollar to help boost the equity markets. I came across this gentleman here. Very great content. If you're interested in getting the real scoop on shipping, global shipping, trade wars, things of that nature, take a listen to this guy. Listen up for a moment.
With shipping, is the trade war over between China and the United States? I'm your host, Sal Mercogliano. Welcome to today's episode. So we had white smoke come out of the building there in Geneva with an agreement between the U.S. and the Chinese trade representatives over the tariff issue that has been captivating the entire planet. Well, maybe not captivating everyone on the planet, but it sure has been captivating me and my channel here over the past couple of weeks. We got an agreement that came out. Here's the information over from Splash 24/7. As part of the deal reached in Geneva, Treasury Secretary Scott Bessent said both countries would lower their reciprocal tariffs by 115%, meaning the U.S. would lower its tariff on Chinese goods to 30%. China will reduce duties on U.S. imports to 10%. These measures should kick in by May 14th. This is a 90-day temporary agreement. So obviously some great news. Not surprising, I will tell you, because for most people, they assumed that there was going to be an agreement. I don't know why we had a lot of hysteria about this. The idea that 145% tariff was going to last long was really not doable. China exports, 14% of all Chinese exports go to the United States. We consume 40% of our imports come from China. This is a trade war that could not last very long. I went out on a limb on Sunday and I said this, not a real surprise. The question will be the total tariff. Trump said 80%, but I would estimate between 20 and 50%, and I went on the high side. My bet was on 40%. This is why Sal does not gamble, because Sal will always come extremely close, but not good enough to win. So Let's delve into this and take a look at what the situation is in the ports right now as this tariff now starts to retract back down. Now, before we jump into that, hey, if you're new to the channel, take a moment, subscribe to the channel, and hit that bell so you'll be alerted about new videos as they come out. So this story was in the news this weekend from CNN. Zero ships from China are bound for California's top ports. Officials haven't seen this since the pandemic. Okay. This created a lot of discussion across social media on things I follow because that's wrong. I don't know how to say it more than that. That's an incorrect statement in the headline. Now, I said that, and everyone came back at me and said, well, read the story.
So check this out. Sal, his channel's terrific. He has high-level expertise in this area, and he is basically calling out CNN, saying it's absolutely wrong. They were looking at a very small time frame, a window of time when zero ships set sail, new ships set sail for the U.S., and I highly recommend his work. Check out this video. If there's going to be one video that you watch, please make sure it's this one. He talks about how he was supposed to be on that CNN doing the interview, and they brought a port official in to basically scare people. You know, they're saying that port official said zero ships. CNN ran with that headline rather than validating that information. So I was thinking about that. I'm like, why would they do that? You know, and I think it's to get people afraid. I'll bet there was a whole bunch of buying that happened this past weekend with the concern of nothing, you know, empty shelves, right? That's what we've been told over the last few weeks. Just brace yourself for these empty shelves. And, you know, I think, I mean, we don't know. If there is panic buying from everyone, that will wipe out the product on the shelves for sure. But if everyone just stays level-headed, you know, you just buy what you need, I think we're going to be just fine. There's a reason that this narrative is taking over, and a lot is taking place currently right now, and we'll see how it unfolds. But, you know, I was on a podcast last week, and I was asked about the equity markets, and just this idea, this information flowed through, and what came out of my mouth was, you know how when you get an inspired idea and it just goes through you, like, you know, it wasn't of you, it was just from a higher source. And the information that flowed through was that over the next 10 years, there would be more money made in this equity market than there's been made in the previous 40. And that was a really strong statement, you know, that going forward, there's more money to be made than in the past. So that means we're going to see higher valuations, higher equity prices. But then we also have to discover, you know, what area is that going to affect in the equity markets? And I think it's technology, it's AI, even though AI is soft right now. But even quantum, D-Wave quantum earnings came out last week, you know, with this quantum computing that they have, and they're just scratching the surface of getting these quantum computers out. And the stock was up 60% in a day. Like, it was an incredible thing that happened. So that's kind of the look going forward of what we can expect with this equity market. Big moves to the upside. You just got to be in the right sectors and relax. You know, don't get freaked out or panicked out of your investments. Stay strong, stay in them. You're going to be just fine. This has happened many times in the equity markets, and this high degree of uncertainty will work its way out so that the markets can find, again, a much more fair and orderly system of doing business. So that's all I've got for you today. Check out Sal's channel. It's fantastic. Highly recommend his work. Level-headed guy, really great researcher, high level expertise in the shipping arena, and I think you'll enjoy his work. All right, y'all, have a great week, and I'll see you next Monday. Thank you so much. Bye-bye.